Well, good day, all. Ira Epstein, and here we are with your metal market wrap-up. And this wrap-up is for the evening of February 1st, Thursday, 2024. Dawned on me something. I'm looking at the stock indices, what they're doing, and how the markets are responding. And I'm thinking about one of my rules that came to light, and I didn't expect that it would this time, all right? I really thought that this Fed meeting would not have a lot of impact on the markets. I thought that it was well broadcast the Fed wasn't going to do anything, that the markets would absorb that and realize that probably come late spring, summer, the Fed will make its move. And the markets did to a degree. And you saw the markets come down. And for those of us that were bullish, I knew at some point you'd be overstaying a hand and it would come down. But if you look back, these markets have recouped all those losses. Why? You have a double whammy that we haven't seen in a long time. The world's in love with the mega stocks, as you know, and they're reporting. So as they're reporting, the markets are going up and down with it. The markets had a chance to digest also what the Fed did. Did you get a lot of downside follow through today? Not really. The dollar got hit and a number of currencies went up, and we'll talk about that. But where I see the market having made a decision to a degree, as I think it's made a decision that the dollar may have peaked right here. Probably not going to get to that 104 zone, but we got close enough in the 103, 50, 60 area. I think that the market is making up its mind right now in stocks of whipsawing like this, probably not going anywhere. Bonds and notes act like they want to continue on a path that the market will ultimately see lower rates. I think that's one of the things. As we take a look at Bitcoin, I'm questioning, that 38,000 level, probably downside enough. But let's get to some of these markets and get a feel. And maybe what we should do before I go to all the charts is talk about what's going to be tomorrow. Because you're going to get the non-farm payrolls. The number they're looking for is 185,000. That compares to the prior month's 216,000. They're expecting that the unemployment number will go up a tenth from 3.7 to 3.8. There's a lot of noise in that. And they're looking for average hourly earnings to go up 0.3. Factory order data will come out after that at 9 o'clock. We know that we've not seen anything great out of industry, but they're still looking for that up 0.2. Last month it was reported at plus 2.6%. The University of Michigan, final January consumer sentiment indices. Well, they're going to come out at 9 o'clock. We'll see if they come in. They're looking for them at 79, comparing to the early prelim figure of 78.8. So you can see where you're at on that. All righty. But it's all going to be in the morning, as you know, about the jobs number. In gold, we refuse to come back, or the market does, to the 18-week moving average of closes. The market is still stuck in a trading band, but it's starting to put together some bullish numbers. You have today, Thursday, an outside day to the upside. So unless today's low is taken out tomorrow or Monday, the odds favor this is the beginning of a continuation pattern where the market comes up and tries to work higher. When we look at moving averages, you can see where the battleground was. For 4 days, the battleground was at the 18-day average of closes. So I think it makes sense that traders are going to look on pullbacks for support in the market, not to get back under the 2046.40 level, which was the low today. Where's the resistance? Well, why do you think you stopped right here? The Bollinger Band. Now, eventually, markets have to work out of sideways action and break out to the upside or downside. I don't know that I could call this enough sideways action to say that the market's going to pause here or not, but generally, hitting a Bollinger Band results in a resistance point, and if you don't believe me, you're at 2 days in a row, and if you hit it tonight, that'll be the third day in a row. You're also overbought. So it's hard for me to tell my clients, hey, jump in, get on the long side when you're overbought at an upper Bollinger Band, but the pattern is looking favorable, I can say that. In the gold-silver ratio, right now it's flirting with fighting a battle at the 18-day moving average in red, but it's staying under that number. The last is 89.06, so I changed my colors to silver, and it means that as long as it's doing that, the lower this goes, the more friendly silver is over the gold market. When we look at the silver market, It has a pattern where it's attempting to make a higher high. Right now, it's got a pattern that dropped back. This low took that out. So you don't have higher highs, higher lows. You've got no pattern. You got up to the 100-day average, the Bollinger Band area. You stalled. You fell back to the 18-day average. And you've been fighting there for about a week, and you're overbought as can be. Another dangerous position to try to get into. In the copper market, you're now correcting an overbought condition. So we know China's pulling out the plugs in every which way that it can to get its housing market back in order, to get factory orders coming back, consumer confidence up. That's great. They threw $21 billion today at the market, saying that's money for apartments, some infrastructure they're going to do in addition to everything else that they're doing. But the market looked at it and it wasn't impressed and it fell back. You had 48 hours to get out against the upper Bollinger Band, not an embedded reading, and the market fell right back. To get to the support area, you got to break the trend. The market's overbought. I don't think you're attracting new buying in the market. In the platinum market, it's a battleground of the 100-day average in green and the 18-day average. Momentum, again, flat now, and no trend. Higher high and lower low. Not a lot going on. Schizophrenia is the way to decide on the dollar index. And tomorrow could be another day, depending on what the jobs data shows. You know, they're looking for 185,000. What if jobs grow again instead of decline? What's that do to the Fed's thought process? Tomorrow's going to be a wild morning. Got to get through that jobs report. But if this market starts down from here, you got to be careful. You've lost your bullish embedded reading. You're coming down. I think you then say to yourself, uh-oh, and I'm saying that tonight. You closed 102.87. You're back under the 18-day average. So you're getting this momentum down. If you clear the 102.80 level on a close, then you're underneath also the combination of the 200-day average and the 18, and then I think you're heading down and you could be going back into that 102 zone, which could pick up what the foreign currencies are going to do against the dollar. Again, you've got to go through that report. You've got more finishing off tomorrow. You got more earnings. Today, wild what Meta did at the end of the day, up 15% to give you an idea. Apple not doing that well with things. I'll talk about a lot of this as we get into the financial market update, but I do want to remind you, we cover all this intraday. If you look at our website, you're going to see, you can click at any point, this blue, like you're seeing there, and it's going to walk you through then where you can start adding things to your shopping cart. So you click on the blue, you scroll down, you click each one of these things, away you go, and you can add to your cart over and over. At the bottom of the page, we'll be asking for your name, your email address. Then we'll send you all this via email, come right to you. We typically, if you do it during the day, like now, we'll have it to you tomorrow. But if it's like on a weekend, just wait for the next business day. It'll all come in. But there's quite a bit here. Guide to technical indicators, the different courses that we have, the Arun indicator. I think you'll love when you play with that. You're going to get, if you haven't tried, our price counts, fascinating there, our trader's manual, all those type of things in here. How do you get this? Go to iraepstein.com or move your cursor to the top up here. You can get that way. And if you go to iraepstein.com, go to free offers on the top left. I'm Ira. You have a good trading day.